The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. So we're going to take a look at the DAX hourly chart like we usually do. As you can see, it has had with the equivalent of a dead cat bounce compared to what we're doing in the NASDAQ here in the United States. So keep an eye on this DAX chart because we still have a little more to go to the downside to complete the larger ABCD pattern on the DAX daily. Let's just bring this up so that you folks can take a quick look at it, and you'll be able to see the daily chart, and you'll see that we've got about another couple hundred points to go to the downside in order to fix it up. I want to comment just a little bit about the NASDAQ. Hardly ever do I watch the news, and I was watching the news to get the weather, actually, because we're in the middle of the monsoon season here, and I noticed that Facebook's earnings came out, and I saw that the stock dropped down to the 156 level, 156 from about 165, and they were commenting on the news that, gee, they couldn't understand why the stock was down because the news on the stock was so good. It had, really good membership rates or whatever they do there, and the income was good, and a 17% increase in something. And pretty soon the stock moved about a half a point, then another point. And in about the next 3 to 4 minutes, the stock was unchanged. It went from 156, and I believe the high this morning has been about 180. So it's moved 25 points in a matter of hours from the time when the report was leaked. And that's one of the problems when you're dealing with that overnight market in stocks. It is really thin, folks, because you can see it jumping around quite a bit. But that's what caused this massive run-up in the NASDAQ. We haven't had much of an increase in the Dow, of course, or the S&P, even though they are up. It's been nothing like what's been going on in the NASDAQ. This is nothing like what was happening in March of 2000, folks. That was the dot-com bubble, the end of that, which was March 24th. And believe me, they would open 30, 40, 50% higher on some of those, really an amazing thing to see these things move like they did back in that time frame. I mean, it was really crazy. Some of the Dow stocks were certainly not coordinated well enough to go up that much, and that's why the Dow had topped in January of 2000, and the NASDAQ didn't top until March of that year. Whether that's going to happen this year or not, we'll have to wait and see. But we do have something very important to discuss that we started this week with, and we want to get right to it because it's done pretty much what we had hoped. We'll put this up here and take a look at it. This is the euro that we looked at the beginning of the week. This is the daily chart, and we were watching the highs from 2015, which came in at the 117.40 level. And we took that out last night really early in the evening, just right after the normal close of the futures market in Chicago. It was around 4 o'clock. The market rallied up to around the 117.77 level and promptly broke well over 100 pips very, very quickly. Now, this is extremely important because if you take out those highs and don't accelerate, this is not going to be a very good valid breakout, and we watch that closely because if it's a valid breakout, it is going to power through that and can go a lot higher without even stopping. So watch this euro very, very closely. We're down about 90 pips from the high, and so most of this was, of course, that last move from 116 to 117.77 was all based on what the Federal Reserve said, and I really don't know what they said, but I guess they're not going to raise rates, what it looked like. But if you look at the Treasury bond contract, folks, the one that we've been talking about from the short side, it's now down almost 3 handles from the high. well over $1,200 in the notes. So that's a very large amount. And we went up last night after the Fed had its notes out. The bonds actually rallied a little bit. They rallied 1 point to exactly the 382 level at that 153.09, and it's now dropped well over, it's dropped $1,000 from that. We're almost ready to take out, the lows that we made before the Federal Reserve talk. So this is basically telling us from a chart perspective that it looks like interest rates really want to go higher and not lower like the Fed is trying to tell us. So watch the charts. Those will be the ones that, determine whether you're going to be a higher interest rates or lower interest rates, but keep a very close eye on that. Of course, yes, when one of the commenters in the den today is talking about Amazon, that has also been a big mover, but it's only up about 12 to 15 bucks, which isn't much on $1,000 stock. It's mainly the one on the Facebook that is actually moving. I'll do the NASDAQ chart after the break because it's jumped so much. I have to recalculate where the numbers and stuff are. I believe something around the 59.95 to 6,000 level is some time of small resistance. Steve Rhodes posted a really nice long-term chart this morning that shows the 1.618 up there at 61 and change, which we might even make that today. Who knows? These markets are pretty jumpy, so it's all very possible. On an open interest point, folks, we've had this big run here yesterday in the stocks, and the open interest dropped in the Dow Jones futures. The open interest dropped in the Russell 2000 futures. The open interest dropped in the mini S&P dropped pretty substantially over around 13,000 contracts, and the open interest in the NASDAQ was basically unchanged. So this is you're going to have new buyers to come in here, or shorts are going to start to cover, which most of them are doing that, I would think. So we'll see what's going to be open, what's going to happen. Excuse me one second. What's going to happen with it over the next day or two. We had Stan Harley as our guest yesterday, and he was looking for a top to come in on the 26th of July. Today's the 27th. It might be a day off. It might be completely wrong. We don't know, but we'll watch it, closely. But we don't have any confirmation in a couple of these indices. But believe me, it's very, very rare because the earnings have been stellar. That's the only way you can say it, because every time, you have one from Procter & Gamble, then you have one for Caterpillar, then you have the one for McDonald's, and then Boeing Airlines, which blew the top off of everything yesterday. The Dow would actually have been down yesterday, folks, if it hadn't have been for Boeing Airlines. Boeing Airlines, I think, was about 90 points of the Dow, as someone mentioned on Bloomberg. So we'll see. Yes, evaluations are high, but believe me, that doesn't mean they can't go higher. So just be patient and see what's going to happen here. When the reversal comes, and eventually it will, it's going to give you plenty of time to get into the market. That's my bottom line. So we'll see. We'll take a break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the NASDAQ E-mini contract. I've posted the 15-minute chart. The reason why I'm posting such a short-term chart here is because you like to see, what these moves are intraday, and as you can see, they've been, relatively harmonic. You go up and you come down to a 78% of the previous low, and then you expand up to a 1.618 expansion. But if you look at the chart of the E-mini NASDAQ, you can see that we are very, very close to a 1.27 expansion of the whole move from June 10th down to July the 10th. That would come in right at 6,005, I believe. We're trading at 59.91.92 right now, as I checked just a little while ago. But that's we're 59.92 right now, so we can easily get there. That's just a heartbeat away. The Dow and the S&P are still lagging, but remember, these are different markets, so you have to trade each one of them different because the components in the NASDAQ are heavily based on these really expensive stocks. And just like the Dow, you get the big stocks in the Dow are Goldman Sachs and these ones that have the high cap, and those are the ones that will power the market forward. We've seen this before too. The NASDAQ is doing pretty much the same thing. The S&P 500, because there's 500 stocks and they are cap weighted, that's a little different and it's fairer, as is the New York Stock Exchange Index. But even the New York Stock Exchange Index is in new high ground up near the 1.618 level, as is the IWM. So there's a lot of things saying that this is the time to be cautious. Don't throw caution to the wind, and try to be just inadvertently buy something because it can make it pretty expensive. Okay, let's move on to a couple others that are having some really interesting moves here. We'll start out with gold. We were on yesterday when we were making this 61% retracement in the gold market. It was down $16 from the high. As you know, one half of the harmonic number in gold, which is 34, is 17. So we came within $1 of that, hit the 61% retracement spot on, and then we've rallied all the way up to the 1265 level this morning, which also is a very important level. And we're going to go through that and take a look at it this morning because it is a very important level in the gold market, and we need to watch that very, very closely. What we'll do right now is we'll move this over to the silver market for just a second, because silver and gold are running in tandem once again, and we want to watch this because it's a really nice setup. If you're bearish gold and silver, folks, this is your kind of day, because as you can see from this silver chart, which is the candlestick chart, you'll notice this is nearly a perfect technical picture. You can see the three lower tops that we're looking at. The lowest one right now is where we are. The 61% retracement comes in at 1678. So far, the high in silver has been 1681. I think it's trading at 1678 right now. And so this could be a very interesting. And remember, we are up 2 weeks in this move. The low was made back on July the 10th, so we've been up 2 weeks. So that's a major thing to pay attention to with both gold and silver. And as you can see, the gold line that you're looking at there, that's the price of gold, and it's making a little different pattern, because you see the gold made a higher high back in from April, whereas the silver, all it could do was make a 61% retracement. So silver is still in a very strong bear market, whereas gold is not. So this could be very interesting today, especially with the fact that we've got a lot of stuff looking at it. And someone's just mentioned if that is a 135 pattern in the silver, boys and girls, it is flat out spot on. It can't be better than that. You've got the first high came in, drive 1 was at the April high, drive 3 was at the June high, and here we are right now at the 61% retracement in silver at the third high, and that's the 135 pattern. You're in a downtrend, and believe me, if silver gets above 1690, this would be what I would think would be a failed pattern. So watch it very, very closely. This is about as near as you can get to a trading with the trend type move, because you're selling into a bear market. You've got lower tops, lower bottoms going back over the past year since January. So this is certainly still a downtrend. So we'll watch this one very, very closely, if not for anything, just for educational purposes, because it's got all the things necessary that you'd like to see if you like to trade with the trend, which many people do, because it's a fun thing to really keep an eye on. Someone's asked a question yesterday about the VIX index. The VIX index had something very unusual happen yesterday, folks. It had what we call an air pocket. For some reason, and the VIX doesn't do this very often, but the VIX dropped from 950 to 863 in a matter of about a minute, and immediately went back above it. Now, some people were saying this was a fat-fingered error or a mistake, but actually the exchange reported it as valid trade. So I don't know what happened there, but the market did experience a pretty big vacuum. If you get a chance to go to your VIX charts and go down to your 2-minute chart, and you'll look and you'll see it, and you'll see that it'll be really interesting what happens, because the market quickly snapped back above that level and had remained there the rest of the day. So whether this was an aberration or not, I don't know, but sometimes they do occur, and it could be that just one person just got extremely frustrated of being long the VIX, or he was wanting to sell it, sell it short. I don't know, but there was not much liquidity there. So that's a very interesting thing, to pay close attention to from a technical perspective. What I'll try to do is at the break, I'll bring that chart up on the VIX. I thought that I had it here, but as luck would have it, and luck is a little bit early in the morning here, so I can't really find out, where we are, with this. So we will look at this VIX chart when we come back from the break, which will be in 1 minute. We've got one other one that's spot on here, boys and girls, that we have to pay attention to today if you like Fibonacci, and I know some of you do. So we'll take a quick look here at this move. Thank you, Gator, about that 135. I saw that, but I didn't have a chance to type it on the chart. Take a look at this crude oil chart, folks. We're completing an ABCD pattern. We've been up here to this 48.90 level. That's the exact D point, 48.95. And we backed off about $1 from that earlier this morning. We're coming right back, testing it again. So if we can get this crude oil above 49, it's going to be really interesting whether it can still, have enough gusto to power ahead to that next level. So we'll keep a close eye on the crude oil too. There's just a lot of things happening today. We've got gold at 1265. If we get above 1268 in the gold, that's going to be what I think is a pretty substantial move coming. If we get above $17 in the silver, that also would tell us that we've got something powerful coming. And then also, in the bonds, if the bonds break below 152, that's going to be a failure, because you had a 382 rally after a very nice Fed report, and yet the market didn't do very much. So this is telling you that interest rates want to go higher, not lower. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the VIX index in here, looking at a 2-minute chart. And the reason why I did this is because of the fact that it showed a trade down there at that 983 level. But if you looked at the VIX futures, there was no movement like that at all. So there was some type of an aberration with that VIX index. I don't know what happened or why, but there's a big difference, and whether the market will do anything about it or not, I don't know. Most of the time what they'll do is they'll just forget about it. They're chatting a little bit about Twitter. Probably one of the best spread trades of the year is to be long Facebook and short Twitter. We've got Facebook up 10%, and we've got Twitter down 10%. So that's one heck of a move. I don't understand why Twitter is under so much pressure, because it gets more press than Apple, because the president's in there tweeting all the time. So, and I'm not a social network person, folks. I'm one of those 2 billion people that have never tried Facebook or any of the others. And I probably won't. But remember, I was not sure about color TVs until 1988, and I was not sure about microwave ovens until about 3 months ago. So just keep that in mind. But I don't trust that stuff. I think it's an access to, people coming in and stealing your ideas and your identities and stuff like that. But watch this. I think the main things to look at today, folks. Let's just check the opening of the market to see what we're doing so far this morning. We did open quite a bit higher. Let's see, we got the Dow is up about 50. We've got the NASDAQ is up 40. And we've got the E-mini up about 5. So we'll see what's going on with some of these things. As far as, let's see, the crude oil is still below 49. And we'll watch some of these others, but the bonds are 52.15. They're getting ready to go south, I believe, folks. If we get below 152, that sets up a retest of that old low, and that means we could hit the 147 level in bonds. That's down 5 handles. Remember, we're already down 3 handles in just a matter of a few days here. So I would think that would be a very, very important thing to look at. As we look at the bonds, just look at them here on this chart that we were looking at right when they made that fib point here. You'll notice that if you just did the ABCD pattern here on the bonds, you'll notice that the structure from 157 down to the 151.5 level, that's 5.5 points. We rallied up to the exact 61% retracement by one tick, and now we are coming down. We're almost ready to take out those lows at 151.20, and if we do that, the ABCD structure on this measures down to 148. That's another 4 handles down. That would take you down to the 78% retracement of the move from March, as opposed to where we hit the 78% retracement of the move from May at the 151.60. So this has a possibility of being a relatively bearish chart. Remember, on the long-term weekly chart, folks, this thing topped at 177. So this is a bear market. We've had a pretty good rally from March through June, and it looks like we're ready to start heading lower. At least we have so far. And we'll have to look at it day to day. But right now, it's not looking like interest rates want to go lower at this level. Part of this, Jeff Bezos just announced he's the world's richest man. Oh boy! All they have to do now is put him on the cover of Time magazine, and then you can start shorting. Then you can start shorting Amazon, because Time magazine. I don't even know if Time magazine's still around, is it? Or maybe Newsweek stopped. I don't remember. I don't know how these magazines even keep up with it, other than doctors and dentist offices, but we'll have to wait and see here. Okay. Don't forget, we had Apple. Apple's got to be more valuable than, I don't know if this is true or not, but Apple should be more valuable than Amazon, because of the fact that it split 10 for 1, and that would put, Apple at around 1,500, I believe. But I'm not even sure, but we'll wait and see. All I know is that Mr. Zuckerberg made $1 billion yesterday from the opening of his pre-market announcement, where it went from 156 up to 178. I believe that's $7 billion. Excuse me, it was 7-1 on Apple. You're absolutely correct. My bad on that one. But anyway, there's a lot of rich people. You have no idea how much worth that is, folks, because back in 1929, when I think it was Andrew Carnegie, sold U.S. Steel to Charles Schwab, for $454 million. Can you imagine that in a depression, right at the start of the Depression, $454 million? I think that was equivalent to about $65 billion today, but that's how much money, back in those days was going on. But you could still buy a car. You could buy a Ford automobile for, $350 to $400. So times have changed a bit. Anyway, Amazon's a great company, folks. I mean, I use it all the time. I mean, my gosh, you just order something, and if you don't like it, you send it back. They don't charge you for the service, or they don't charge you for the shipping. It's a heck of a deal, and it's pretty much, like it says. You're right. Dudette, that it was pretty much unknown in 1998. Okay, here we are. Boeing Airlines is still up. It's up at 239. And it is going up. That's correct. Steve Jobs was very, very rich, and he also died. The one thing you can be sure of, folks, you're going to leave with the same amount of money as Warren Buffett, Jeff Bezos, and Bill Gates, all of them combined. You're all going to leave with the exact same amount of money, and that amount is zero. They don't let you take it with you. In fact, one of the license plates covers that I used to laugh at was "The man who dies with the most toys wins." Boy, what a silly thing if that's what your value in life is. The value in life is your friends and your family, not the toys that you have. And that's just my opinion, of course, but, what do I know? Let's get back on my soapbox and talk about some of these markets, because they're really jumping around. Really watch these. We're just at a really critical level in so many things today, folks. It's going to be very, very interesting to see if we get to these levels that we're looking at in silver and in gold and in the crude oil and in the euro and in the bonds. There's just a lot of things happening. I mean, even in the stocks, there's probably some things happening, but that's how markets end. They go ballistic. They go vertical. Please let me in at any price, and that's what we're looking at. So keep an eye on that. Okay, did we hit a spike of 59.08 in the crude oil? When did that happen? Oh, it did. Wow. I wonder what happened there. Yeah, it did. It went above the. It went above the key number by, that must have been a report of some kind, because, let's see, the NASDAQ backed off a little bit here. It dropped to 20 points right after the opening. There was some selling coming in. Somebody must have made a mistake and hit the sell button instead of the buy button, but we'll have to keep an eye on that. Alrighty, the next one we want to watch, of course, are the grain markets. I believe we need to wait a little bit longer on these grains. And then, sorry, folks, you guys make me laugh. But we'll be right back after these few words.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I posted the chart of natural gas. We've had several people ask about that, and that is one of my specialties, natural gas. So if we take a look at it, you'll see we're in a buy zone because we pulled back quite nicely over the last 4 or 5 days, stopping right at the 78% level. Any new lows in here now would really negate this pattern and would probably be heading down lower. So keep an eye on it. It's very, very important. Let's go down memory lane here for just a second and take a look here at these grain markets. We're going to start out, basically, I just want to do one or two, but if we look at the, Minneapolis spring wheat yesterday, this is the chart that we were looking at. You notice that we had the ABCD structure coming in at the exact 382 level. And we mentioned there that this wide bar that we had yesterday usually is highly suggestive of the market that wants to go lower. Now, what we want to do is to update to see if that in fact did happen, because these are probabilities we're dealing with. And as you can see here, by updating this from what happened yesterday, is the market actually made a lower low than the previous day by 2 cents and then proceeded to rally 20 cents. So that 382 is certainly still held. And as long as we stay above that 730 in Minneapolis wheat, this still has a very strong bullish potential. However, keep in mind, folks, that we almost never trade Minneapolis wheat. We trade Chicago soft winter wheat. That's the December contract. So this is just the one that started the whole thing, because this is the crop that's been damaged. It's moved well over $15,000 since the 10th of May. And now it's in a consolidation area, and believe me, this thing could go a lot higher, because pretty much the wheat crop for that northern wheat, that spring wheat, is pretty much decimated. And so it's going to be basically a demand market in this, because the supply market is pretty much determined. So we'll just keep an eye on it, because Rich Anderson has alerted us to it, because this will affect soft winter wheat, our December wheat, because it also is happening, like it has some potential for a pretty good rally from this 507 level that we're looking at. As far as one of the other grains that we're still waiting for, and that is the soybean market. This is the new crop soybean market. Okay, Bob, I'll do my best to get that Christmas corn up here for you. I hope I have it. If not, I can certainly do it from memory. Anyway, we're still waiting to see if we can get down to about this 960 level. That's about 40 cents a bushel from where we are right now. We're trading at about 10.06, so it's still got potential to get to that level. Now, the December corn yesterday, we mentioned the fact that it was sitting right at the 78% level at the 381 a bushel. We've rallied about 7 cents a bushel from that level. That should be strong support now, but if that fails, we would be looking at the next level to come in, which would be the 78% level, which would be down around the 370 level. One other thing about the crude oil, folks, if you take a look at the heating oil and if you take a look at the gasoline contracts, those have already broken out. So it's only the crude oil that has been lagging behind. And I don't know if this little, whatever this report was, it made it jump 10 pips, which is really nothing, if that's going to be significant or not. But the others have already, exceeded the 61% level. So it's only the crude oil that has been lagging badly. Now, I wanted to finish the show today by looking at some really key currencies that we've been watching for quite some time. And one of them, of course, is the one across the pond, is the British pound. Let's just get this one up here. You'll notice here the British pound, again, we're sitting right at the 382 level. That's why it is so very, very important. And by the way, folks, on the Euro chart, that level at 117 is also a 382 going back several years ago, back into 2013. So that could also be a really important number. And here we are at the British pound again at this 131.40.50 level that is also telling us that we're at a 382 level setting there also. So it's very, very interesting that we're at that particular level. And then, of course, the one that has been the most bearish has been the Canadian dollar. And as we look at the Canadian dollar here, and this is a weekly chart, and you'll see that it is heading down towards this 117. We're only 7 handles away now, and you can see the beautiful, the short up there at that 136.5, 137. It was actually 136.80 level, was the 61% retracement, and we still have another another 7 handles to go to get it down to this 116 level, which is the 61% retracement, and also a 1.618 expansion of the move from 2016 2017. That will be a long-term price objective, an ABCD pattern going back over 6 years. You have to take a look at that one from the long side, folks. I mean, when we get there, we'll be able to, refine our entry point, I hope. But it's going to be really interesting at that spot because that's a perfect ABCD in a long-term bull market, and it's really the first major ABCD pattern since 2012. So when we get there, if we do, it's going to be quite interesting. So it's a big one going on, but we're rocking and rolling in these currencies all the time, folks. This is the ones you want to really trade because they give you the most bangs for your buck. They really do. They allow you to risk as little as possible in markets that are extremely liquid and extremely volatile, and that's what trading is all about. So foreign exchange is where you should keep your focus. Gold is great, crude oil is great, the treasury bonds are great, and then followed down the road by the NASDAQ and the S&P and the Dow Jones. Those are okay too, but the real play comes in with the foreign currency. Not only that, but you have more things to choose from. You have about 10 different cross rates that are easy to trade versus just the 3 of the indices. And believe me, the volume in the currencies is many, 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 many times bigger than those foreign, that index stuff. Believe me, even soybeans, wheat, and corn, trade better than some of those indices, in my opinion, because they're not affected by the Federal Reserve. And the Federal Reserve is certainly in there doing their quantitative easing or diseasing, whatever they're doing. But that's what's going on. So we've got about another couple of minutes here. One other thing that I did want to chat about, and I believe it was this wheat market, because we're really, really, really close down here to this ABCD pattern that we mentioned in the with the corn. But you can see the wheat has still got a possibility to get a little bit lower. We're trading at 507 right now. And I think we've got a chance to get down to that 499 level in Christmas wheat, where I would certainly be taking a look at that on it from a long-term perspective. That would be one that would be really interesting, to pay close attention to. All right, let's see what other things. Just keep an eye on 2 things today. Well, 3 things. The main thing is to watch the euro. If we get above that 117.80, we're off to the races. If we can get below 152 in the bonds, it looks like we got higher interest rates coming. And if we get below this 1255 in gold, we probably made a major high in here today. So we'll take a little break, right back, pay a few bills, and we'll finish up the show.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a quick look at this December corn. As you'll notice here, you'll notice that red line that we have there that's marked from April through July, stopping at the 61% retracement, which was 381. We're trading it at 388 right now, so that has held so far, but you can see there's still a possibility that we have an ABCD structure that would take us down to the 78% at 370. So if you bought it at 381 yesterday, you put your stop at break even and let her rip, because you don't know which one of those numbers is going to be the one that really counts. Now I need to share with you one other thing that one of our favorite folks from the city of the the wind. Las Vegas, Nevada has alerted us to this morning, and that is that we have a really big drop coming in the transportation index, folks. As you can see here, we made that 3 drive to a top pattern back on July the 14th, and look what's happened since that time. We've already made a 50% retracement of the whole move down. And that last little rally, that little 2-day rally we had at the beginning of the week was not even a 382 retracement. This gives price objectives at least 300 points lower in the Dow Jones Transportations. So it's hard to believe, well, it's not hard to believe, but that this might be one of the indications that maybe there could be a tiny bit of trouble in River City. But again, the operative word here is tiny, because everybody loves these earnings and they love the tech stocks. But remember, love can turn to hate very, very quickly. So keep an eye on this as you're watching some of these things unfold. But there is a very interesting pattern going on with that Dow Jones Transportation. And don't forget, we do have the possibility of higher interest rates coming in here, which is usually not good for stocks, but usually, again, is the key word, because you don't always have that. The other thing that we mentioned, this is from our good friend, Arch Crawford, and also from our friend Stan Harley. Both of those mentioned the fact that, the new highs to new lows has been not doing too well either. So 877-927-6648, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.